Hello everyone, welcome to another edition of MK Macro and Market Moves. Today we have with us the CEO of the Institutional Equities desk here at MK, Mr. Nirav Sheth, who will share with us how the markets have been so far and what to expect going forward in what is likely to be quite a volatile year ahead. Hello sir, thank you for being here, and we'll just try and get some insights on how the markets have moved and what to expect going forward in this discussion. So first up sir, obviously the biggest event of the year has just gone by in India, right? We had the elections. And of course, the result was a bit of a shocker to what everybody was expecting. But in the last week, with the cabinet formation happening, with the Prime Minister now obviously taking up a third term, there is a sense that continuity will actually be the case. There won't be too much of a shock in terms of policy measures and so on. Having said that, obviously markets were on a bit of a roller coaster in the last week. So going forward, how do you see the policy reform agenda going now, with the sort of government we have in place, and what impact will that have on the markets, and especially the perception that the market has of the government now?
Right, so let's try and break this up into two parts, right? We try and see what has happened, what is the political narrative now that BJP doesn't have an absolute majority, and then what are the implications it has in terms of policy reforms, and therefore finally the state of the markets, right, and the like. So, and I admit that initially when we had BJP just about getting enough seats to form a coalition government, I was very, very skeptical. Because you try and look at the fact that Mr. Modi has been successful in terms of corporatizing India, largely because of the fact that he had an absolute mandate ever in his political career, which is 3 terms as chief minister and 2 terms as the Indian Prime Minister. And therefore, you don't have a template to try and check as to how he's going to work under coalition government. So to me, that is good enough to say that let's step back and see how the markets evolve, because you had a strong rally going into the elections and all. And then obviously the markets corrected, and then you had a serious rebound and you made new highs. Where you obviously went wrong is that this is very unusual, but BJP has got just enough seats that doesn't allow any other non-BJP coalition possible in the center, right? So virtually, while not having a majority, they'll almost run the government like it's a majority. So in a way, it is not probably the best possible outcome, but I don't think that it can change the narrative in terms of how the government is going to function in most of the places. You may have lost some of the moral authority in terms of trying to carry out big reforms, largely on the social side. Maybe we are looking at an UCC or something like that. That may not happen. But if you're looking at, let's say, infrastructure, right, which is a big part and big focus area for the government, then it simply doesn't change anything, right? So now you've got a big event that is behind. Now you know that you've got a stability for the next 5 years, and this is something that I heard when I was in my conversation with the CIOs, that you got Bihar elections coming next year, and there is no way that JDU can do anything before that, and therefore you got a clarity for 1 more year. So people may slice and dice, but they know that you got stability now for some period of time. So you are back to. So there are 2 things to markets. One thing is political stability, which gives you longevity of hopefully the earnings that you can see. And the most immediate part is your momentum in the economic activity. That is very strong, right? So we are seeing upgrades happening. Global GDP upgrades happen in the first half, largely led by US. You are seeing RBI upgrading India's GDP forecast. We just seen core inflation, I think sub 3%, yes, right? So these are all very, very strong indicators in terms of where the economy is heading. And, I need to accept that I was wrong for a day. But yeah, we need to be very, very bullish, because next 5-10 years, and I've said this a number of times, the decks are stacked up for you to try and claim your rightful place in the world. unless we mess up in terms of execution, I think you got a very, very bright future.
Right. So, as you said, obviously we're all bullish on the India story, but in terms of, say, sectoral plays, now you spoke about infrastructure. That was a huge focus area over the last 10 years. Do you see that focus, as you said, do you see that continuing in, say, obviously we've got the budget coming up next month, the full budget. So will that focus on infra continue, or do you think that there will be some realignment towards maybe sort of revenue expenditure or the rural side, which is being touted as one of the reasons why the BJP may have lost some of the seats that it did in northern India? And therefore, there's also obviously been a narrative that now is the time for consumer stocks because of that sort of increased focus on revenue expenditure. Do you think that story has merit, or is it more of a case of, looking for something to, a narrative because of the election results?
Well, I strongly believe in the latter part of what you hypothesize, which is that we are looking at a narrative. So in MP, BJP gets a 60% vote share, which is predominantly an agri market, and Gujarat rural market is again agri dominated, and you had complete run over in terms of the number of seats that you want. So I don't buy that. We don't know what went wrong in UP, and eventually we'll figure out once we have got more data. So first, I don't think the DNA will change, right? So the fact that infrastructure, and the fact that infrastructure eventually will also have trickle down effect. All of us know that, right? It's just a question of time that it takes, rather than vis-a-vis, let's say, giving out doles, so as to say. No, I don't think that will change. They know that they're going to run the country for the 5 years, and they believe that they'll run the country for the next 10 years, so they are not going to take any shortcuts. They've not done in the past 10 years either. No, in a very short answer to your question is that nothing changes. And I'm not saying that you go and buy infra stocks. Valuation is one part of the story, but the focus of the government will be infra for sure. I believe you may want to take some risk to try and stimulate consumption by reducing the revenue neutral rate for GST. Right? It is exactly like what the FM did, that you took the rates down to 15%, yet your corporate tax is doubled in absolute terms, right? So there is elasticity to it. Do you want to pull that plug and say that this is the right time to do it? Maybe where the economies are growing, the way my revenues are holding up on GST, stuff like that, maybe that you will try and do that. That to me is a far more structural trigger to try and see what are the consumption sectors that you want to look at. So I'll try and preempt that. And then I believe that infra is a very, very big sector, but then you want to look at energy transition, you want to look at the climate change themes, you want to look at the power themes. So many sub-sectoral plays as well.
Right. So let's go a bit global now. Obviously, we had the Fed meeting just yesterday, where the Fed actually, even though obviously it didn't change rates, but it's brought the forecast for rates down to only one rate cut in 2024 from what it was saying back in March, when they said that they would do 3 rate cuts. We've got some big global events coming up. We've got elections in the UK. We've got elections, obviously the presidential election in the US. And geopolitical tensions don't seem like they're going away in the Middle East or in Eastern Europe.
Yes.
So how do you see the interplay of all of this working out, firstly? Secondly, a more targeted question in terms of what do you see was going to happen with the Fed, and therefore, what impact do you think it's having on FYI and FDI flows into India? Do you think that, because rates have been so high for so long, have markets got used to it, and is there a new dynamic in play now?
No, so I think, for example, we need to be very careful in terms of analyzing whether the rates are holding up because of discomfort with inflation or because of inexplicable strength in the real economy. And I think we all are surprised at the kind of strength or the resilience that US economy has displayed, right? Absolutely. Which is why the risk assets have held up very well, right? What you don't like is the sort of stagflation, which is certainly not happening. Secondly, I've always believed that inflation or the disinflation process is never linear. There are ups and downs, so I don't get too worried about looking at those monthly figures. The broad directional trend is heading down. Getting to that last mile 2% could be a bit of a challenge, but we have to assume and we have to appreciate the fact that even today the rates are restrictive. Even if US Fed was to go from 5.5 to let's say 5, they still remain restrictive, which is what ECB has done, right? They are not saying that we are stimulating the economy. They are saying that we are being less restrictive. Has the path opened up for that for Fed? Certainly yes, right? So I would like to believe that Fed should be on track. Maybe they'll have one cut, maybe they even have more than one cut. But you are done with the tightening process. We are debating whether it is going to be a soft landing, no landing, but you're not even talking about hard landing, right? So I am not too worried about the global macro. Geopolitics is different. Even there, I think we've seen the worst of at least the impact of Russia, Ukraine. I'm not talking about the human casualties, no one wants that. The impact of Red Sea, stuff like that, Israel, Gaza coming to a very, very fag end in terms of where they're heading. Probably, I would believe that you may get into a period of relative stable geopolitics, is the way I look at it. A big factor now obviously remains US-China, but it is not something that can take, so that will be, they will fought politically more than anything else. What does that do to the Indian markets? I think we've seen the best of the dollar strength, right? If at all anything happens, it will be DXY should, at least that is the view, that as the interest rate differentials narrow, DXY will start becoming softer, which is good for India. Even outside that, I am not too perturbed about the inflows into Indian markets. For example, they completely missed out the rally, at least in terms of the incremental money that comes to Indian market. They own 18% of the market, so that is still a sizable gain in their net worth, if you say so. But the ROE expansion. So now, for example, I just read that my profit to GDP ratio is at some 15-16 year high, right? So that is what drives money at the end of the day. And I think, and I maintain that you will see a surge of foreign inflows into the country in the current year, and maybe then for the next few years.
All right. Now, lastly, just a little bit more domestic and actually even more focused to what we do here at MK. We have our annual conference coming up in August. So just a little bit on what you think investors and even otherwise the broader community can expect from the conference. Any sort of key themes that we can look forward to?
Yeah, so one thing obviously that we want to try and explore is something that we believe in, which we believe that if you actually now looked at the Indian economy, then you've seen a sort of, your earnings getting democratized, right? In a sense that, so you had a period of high concentration of earnings, and now that is being sort of, a long tail is being created, right? Which is why you've seen the larger and the broader markets doing very, very well. And we want to incorporate that in our theme as well, which means that I believe that this time we'll end up having close to about 170, 180 companies. And this will be, like we said, it'll be infrastructure, railways, defense, service economy, stuff like that. So our idea is that if you come to our conference, you'll have a template of the Indian economy, right? So you spend 3 days on a conference and you go back and you say that you are going to be bullish on the Indian economy or not. So that is our endeavor, and this we are only talking about the companies, but we will have a far bigger play in terms of the main track speakers. We expect some policymakers. Would like to have panel discussions around the theme that we talked about. So that's a big focus area in terms of trying to make this event happen.
All right. Awesome. Thank you so much. Thank you so much, Nirav sir. And thank you for watching. Please do stay tuned for more updates and do like, share and subscribe on the channel. And